Investing in the stock market is an incredible wealth building tool, but let's be honest, it's a risky operation with uncertain outcomes. In this video, we're going to discuss some of the most common beginner investing mistakes so you can avoid them and set yourself up for success. Let's get right into it with the first mistake, not having a clear investment plan before you start. I believe your investment plan hinges on two key questions. Do you have the ability and willingness to invest? Having the ability to invest means do you have a surplus of money left over that you can set aside and keep aside for your desired time frame. This is money left over after paying for the essentials like food, housing, transportation, medical expenses, etc. Keeping this money set aside for your desired time frame might seem easy at first, but it's much more difficult in practice. If you don't have enough in savings, you may need to tap into this money prematurely to cover expenses in the event of a job loss or other financial difficulties. And unfortunately, when you need the money the most, might follow a huge market downturn, which could be the worst time to sell your investments. If you're unable to set aside and keep the money set aside for your desired time frame, do not pass go, do not invest $200. Next up is your willingness to invest. Do you believe that your investments will provide a positive return over your desired time period? Do you have confidence in public markets? What's your personal risk tolerance? Without clarifying these points, it's easy to freak out and lose sight of things when markets turn south. The next investment mistake is trying to time the market. On the surface, investing might seem simple. Buy when the market's low and sell when the market's high. But unfortunately, market fluctuations are difficult to predict with any level of consistency. Even professional investors have a tough time forecasting these fluctuations and profiting from market timing. A lot of beginners may be tempted to sit on the sidelines and wait until the market drops before they buy stocks. But there's a few problems with this approach. Instead of trying to time the market, I would encourage investing consistently. Slow and steady wins the race. Invest regular amounts at regular intervals of time, no matter what the market's doing. Let your time in the market, not timing the market, work its magic. The third investment mistake is underestimating how difficult it is to pick individual stocks. Picking individual winning stocks and beating the market is incredibly difficult over the long term. The odds are heavily against you. One study found that over 90% of actively managed US equity funds underperform the S&P 500 over a 20-year time period. And many of those funds are run by professionals who probably have better access to information than you do. Another famous study found that just 4% of US stocks accounted for almost all the wealth creation in the stock market since 1926. Not only that, but it also found that most individual stocks underperformed 1-month US Treasury bills over their lifetime, which is crazy to think about. That means that if you miss out on selecting those very few winners, you'll drastically underperform the overall market. I prefer to buy a total market index fund, which basically guarantees that I'll capture the select few stocks which provide outsized returns. As Jack Bogle, the famous investor and founder of Vanguard, once said, "Don't look for the needle in the haystack, buy the whole haystack." The fourth investing mistake is to let the fear of missing out influence your investment decisions. I'll start out by saying don't believe everything you see on social media and beware of survivorship bias when seeing other people's investment results. I know it can be tempting to follow other people's strategies when you see them post big wins on Twitter or Wall Street Bets, but you shouldn't let this fear of missing out dictate your investment decision making. A few points of caution on seeing these social media posts. 1. Screenshots can be faked. 2. Unrealized gains don't count. In other words, the gains aren't locked in until you sell. 3. Good results, especially in the short term, don't necessarily mean that it was a wise investment decision in the first place. 4. These investment strategies and results may not be repeatable. And 5. Be aware of survivorship bias. For every big win you see online, there's probably 99 people who lost money but never posted about it. So please have a healthy level of skepticism for anything you see online, especially if they're trying to sell you something. And just remind yourself that the only person you should try to impress with your investment results is your future long-term self. The fifth and final mistake is ignoring investment taxation. Unfortunately, the US tax code can be extremely complex, especially for investments. 4 people could each make the same amount of money from their investments, yet all 4 could have different tax consequences based on their other income, how they acquired the stock, which account they held it in, and how long they held their investments, just to name a few. Taxes can eat into your returns if you're not careful. That's why tax-advantaged accounts like the Roth IRA, 401k, or HSA can make a huge difference. The more you understand how your investments are taxed, the better. Someone who understands investment taxation can also utilize more advanced strategies like tax loss harvesting. I'll cover investment taxation in a future video, so please subscribe if you're interested in topics like that. So there we have it. Just to recap, the biggest beginner investment mistakes to avoid are not having a plan, trying to time the market, underestimating the difficulty of individual stock picking, letting the fear of missing out drive your investment decisions, and ignoring taxation. If you found this video helpful, hit that like button and subscribe for more personal finance and investing content. And drop a comment below. What's the biggest investing mistake you've made? Did you learn from your mistake? Thanks for watching, and I'll see you in the next one. Take care.